Good evening. I'm Peter Resnicek from ShadowTrader.net, and this is the weekend edition, the show grounded in technical analysis reality that is here to tell you what's really going on and how it really is week after week. Good to be back with you, especially after last week's short hiatus. We have a lot to talk about this week from the technical perspective. 6,600 big round number in the S&P got tagged like right to the penny this afternoon on Friday. So we're going to see if that is a top. We've also got a serious technical pattern developing where we're bumping up against a channel high. Market profile is also showing us a little bit of topping action with a solid excess high put in on Friday and a number of virgin points of control below us. I'm going to explain all of that in the video. And all of this is happening against the backdrop of a very important FOMC meeting, which is going to happen next week on Wednesday at 2 p.m. Eastern, where, of course, we are going to get a cut. But the question is, are we going to get the quarter point as widely expected, or are we going to get a half? So that could certainly throw a wrench into everything. All right, so all that, much more in today's weekend edition. All right, before we get a little bit deeper, let's take a quick look back and see what we might be able to discern from the action in the 11 S&P sectors and some key financial instruments as far as what happened this week in our weekend review. Reminder, if you haven't been here before, welcome, but also just a reminder that this is all measured from the open on Monday. Remember, as traders, we are only interested in what activity is tradable, not anything that may have gapped from over the weekend or whatever. So from the Monday open to the Friday's close, this is basically what happened. S&P gained 1.33%, NASDAQ about the same. The Russell was quite flat. Russell's kind of already, I think, been front loading the interest rate cuts already, and so maybe was just a little bit tired this week. Sector is pretty much all green, especially the front end. Remember, we call this the front end, where the heavier weights are up at the front, meaning you're talking about technology, healthcare, financials, consumer discretionary. This is the front end, which makes up a little bit more than half the market. And all that stuff was really positive, obviously, because we barreled forward in the markets. Communications continues to be quite strong, and there was weakness in staples, which there's been for a little while. Staples has been one of the weaker sectors out there. Energy was okay. Utilities and real estate have been gaining, obviously, on the looking forward to those rate cuts, so kind of already pricing in some higher prices ahead of that potential cut. Bonds as well, that all kind of acts in concert. Bonds, utilities, real estate, all kinds of together. 10-year yields came down a bit as expected. VIX got destroyed as usual in every up market. Gold had another phenomenal week. I continue to do really well with the covered call strategy and the short put strategy. At the end of this video, I will link to that shadow short video that I made called How I'm Trading Gold. If you haven't seen it yet, you may want to check it out. Oil was up a little bit, and Bitcoin had a great week, up about 5%. We actually have a play in my weekly options room on IBIT, which is IBIT. In a risk reversal. We've been shorting puts for the last 2 weeks, and we used that money to buy a call vertical that's going to expire next week, and that's actually looking pretty good so far. So Bitcoin's kind of on the move, so pay attention to that. All right, that essentially is our weekend review, but now we get to the more important stuff where we start looking ahead, not behind, and we talk about what's really going on. Okay, time now for what's really going on. This is where we look at the major averages in the technical realm, looking at technical analysis of what's going on there. And I think there's a lot happening this week. I've chosen to use the white background here of the trading view chart here. I just think it's a little bit clearer and maybe might be easier to see, but also because I've already annotated everything here. And I just kind of have it already queued up and ready to go. So we'll use this one. Notice that the channel here, first of all, is narrowing. And the main takeaway here, I think that's most important, is that you have the top of the channel here defined. And look what just happened on Friday, like literally right to the penny up against the top of the channel. So from a simple TA perspective, if you trade support and resistance, if you trade trend lines, if you trade channels, this is a short. At the very least, this is not a place, I believe, that traders should be putting new capital to work for new long. So if anything, take your foot off the gas. Obviously, anything can happen next week. We could continue to go higher. I mean, nothing is perfect. TA is what it is. We just have to use it as an edge, if you will, but that's just an edge. It doesn't mean that there's an absolute guarantee of anything. But to me right here from a technical basis, this rally might be cooked and we may have a little bit of a move back. So we got a lot of things going on here from a technical basis that point to that. So we just talked about the channel which we're up against. I would say the next factor would be the key psychological resistance of the 6,600 level. If you note, the high on Friday could not have been more perfect. The high was exactly 6,600.21, which is amazing, like less than a quarter point above the 6,600, and it just died right there, like right on cue, which is pretty amazing. So that also, I think, ties in a little bit. Third thing I would say is the fact that there is general overextension here from the 8 EMA. This green line that you see right here, which is going all through the chart, this is the 8-period exponential moving average. And generally when prices get a little bit overextended from it, in the short term, you will see some pullback. And right now, that amount from where the 8 EMA is now to where that high was intraday on Friday at the 6,600 is 70 points. It's actually 71 points. You can see if you look closely here at the green box, it's exactly 65.29. This green box tells you exactly where the 8 EMA is. So that's 71 points, and that's pretty high because if you look back historically, this is about the same. It's actually probably a little bit less. This looks like it's a little bit less. This one right here is probably about the same. I'd be curious to see what this one was here. The high of this session was exactly 62.84. And at that moment, the 8 was at 61.86. So that one was actually even more. That's basically 100 points if you look at it right here. Probably like 90-ish, maybe like 90 to 100 points right there. That's pretty interesting. And boom, the next 2 days it just came down hard. So 70 is kind of, to me, the beginning of the threshold of when it starts to get overextended. As you can see, there's other examples where it could be more. But in general, the markets don't do well when they get to that overextension from the 8 EMA. And I think if you put that together with everything else we've been talking about with the channel and with the psychological resistance, there is potential for the pullback. Where would we go? Obviously, the 8 is the key, but perhaps to the prior high, which might be a little bit higher, wherever the breakout point was. But usually, you're looking for a return to the 8. And because the 8 is a relatively short-term phenomena. It's a short-term moving average. I mean, 8 periods is not very much. It obviously rides price pretty close, but that also means that it's going to trade on both sides of that line a lot back and forth. So you've got like a basic rally like this where you're all on one side of it, and then you trade here on kind of both sides of it. You trade on both sides. So, there's potential that you would rotate all the way back to the bottom of the channel. We shall see that if you were trading for like a big short, that would obviously be your ultimate target, but we shall see. You want to always take things sequentially, kind of as the signposts occur in front of you, wherever the prior high was, 8 EMA, and then see if you move down to the channel. All right, let's take a look at the NDX. This is a slightly different animal. This is something we've been talking about for a while now in these videos, that it has been showing relative weakness because it was not anywhere near the all-time high when the S&P was already cresting and constantly printing new all-time highs. The NASDAQ was behind, right? But now it has finally played a little bit of catch-up, and it is also at a new all-time high. There is not a channel line here, nor is there a big round number. I would say the next big round number would have to be probably 24.5 here. But it's not the same as like an S&P 6,600. I think as far as psychological resistance goes, everybody's kind of looking at that. But regardless, the NASDAQ is not going to move too independently of the S&P, although we have been seeing a lot of divergence lately, but obviously it's never going to be completely disconnected. So I would say any pullback in the NDX should first be targeting the prior high breakout point, and then to its own respective 8 EMA, which is around that 23,826.17 level in that index. And before we get off these charts, I just wanted to go to the ES futures chart on the same daily and just point out the fact that when you draw the channel here on the futures chart, it's actually overextended above the channel. And this is a pretty classic signal also, if you understand TA, of markets that are getting ahead of themselves. Usually when a market goes outside of the channel, meaning when you are connecting the highs and creating that channel, when you're outside the top of it, that tends to be unsustainable, and it kind of gives you an idea of a market that's kind of going parabolic. And you can certainly see that if you just connect, let's say from here, and then you do it again from here, you can see it's kind of straight up. right? It's definitely a different slope than you're seeing here, for instance. It's a much steeper slope, just something to think about. So that's also another reason why I think it is somewhat unsustainable at these levels. And you'll note, obviously, the psychological number is in play here in the futures. And because the U contract is about to expire and we're about to move into the Z contract, now we're close to parity between futures and cash. And then obviously when we start the Z contract pretty soon, for the December contract in the ES, we will no longer be at parity and the futures will be much more expensive, right? That's how that happens. And then little by little, they'll crush down to get equal to the cash. So that's why the current state of the ES right now is basically it touched the 6,600 right around the same time, just a little bit earlier than the S&P did. All right, so that's what's really going on from a technical level. And now let's get a little bit deeper under the hood. I want to point out a couple of nuances to you in the market internals, and then after that in the market profile. So let's do it. Let's take a quick peek under the hood, as I call it, for market internals. In general, market internals are a tool that you use intraday, but I feel they're also very important on a longer term basis, especially when the markets are at an inflection point and the market made a new high that day. That's one of the most important things to understand about context, is that reading of context in terms of how it applies to price action is generally more important when the market actually does something. So if you have a day that's like an inside day or identical to the prior day, let's say you have a day here, let's say Tuesday, and the next day is a Wednesday, and you're just inside of that Tuesday range, and it's just kind of a lot of back and forth. The context is not really that important. You're basically just chopping, and you should at least have the skill set developed to understand that that context is a lot of push-pull, right? You're probably going to see a lot of sectors going in different directions. You're going to see weak advanced decline lines. You're going to see ticks on the NYSE and NASDAQ somewhat compressed in range and all of that. That's obvious. But when the market makes a new two-day high, or especially in this case where the market made a new all-time high and tagged a special number at that 6,600 and up against the top of the channel, I feel it's important that we take a look at how the market was acting over the course of the day, right? Like what type of market internals and under the hood action were we seeing as we moved up to those areas. So for that, I'm going to switch you over to my market profile screen. And just as a caveat, this is usually in a portrait basis. I basically have it on the screen from a portrait perspective, so it's much easier to read. So what I'll do is I'll just maximize some of these cells so you can see it more clear. But let's just start at the beginning, talking about what was going on with breadth. The breadth was very mixed. And remember, this is all in context of us making a new all-time high and hitting 6,600. The breadth was 1.62 to 1 negative on the NYSE. That means that there was 1.62 times the amount of volume going into down stocks than there was going into up stocks, okay? And on the NASDAQ, that was a little bit positive. In the other direction, it was 1.25 to 1 positive. Advanced decline line on the NYSE was down by almost 900. That's just a simple measure of advancers versus decliners. And on the NASDAQ, it was down by 1166. So far you can see that none of this is really like, rah, rah, we're going to keep going higher. Like this was a great day. It really wasn't. It was kind of a very middling day. And it feels to me like the market was kind of sputtering to get up there. And we're going to talk a little bit more about that when we get into the market profile in the next segment. All right, let's get into the most important part of this screen, which is always the weighted AD indicator. This is a proprietary thing that I invented quite some time ago, and we do sell it on our website. Hint, hint, if you'd like to check it out. This is extremely valuable, and I really believe I will die on this hill. This is worth its weight in gold. It is so powerful. And basically what it is a measure that illustrates in very quick fashion, looking at it as a picture instead of just looking at numbers, basically illustrates the relationship between the 11 sectors that power the S&P, that make up the S&P. So starting from technology and going all the way down to materials and real estate, right? So you've got technology, you've got financials, you've got consumer discretionary, you've got healthcare. All of this stuff is weighted in the S&P, starting with tech, which is about 34% of the market, and then moving lower from there. So it makes a big difference if the market is rallying with technology and financials and discretionary, pushing the market further, rather than if a market is just rallying on real estate estate, materials, utilities, etc. That stuff is not really going to hold up the market because it doesn't have enough weight in the market. Those sectors are worth like 2 to 3% of the market by themselves. The weighted AD here basically shows you a histogram from the open of a calculation that is taking the percentage gain, again from the open, of the 11 ETFs that make up those sectors, such as XLK for technology, XLV for healthcare, XLC for communications, etc. And it's tracking this number cumulatively all day long using these histograms here. And you can see very clearly on a more bullish day, and today was actually, I mean, somewhat of a bullish day, I guess. This is what it kind of looks like when it's building from lower left to upper right. The histogram is the weighted number of the 11 sectors, and the white line is the unweighted line. This is an equal weight line. So when you see a situation like this, and this is kind of a tell in and of itself, is that Thursday you had all this strength in the market, but the white line here clearly tells us that there was a lot of strength in the back end of the curve, as I call it, meaning in real estate, let's say materials, utilities, etc. All that stuff at the back end of the S&P that doesn't matter as much, that stuff was obviously very strong, because if you took those 11 sectors and you looked at their percentage gain from the open, if all of the sectors had an equal weight, that's what the white line shows you. Whereas the histogram builds the way that they're weighted properly, meaning giving 34% to XLK, et cetera, and on down all the way to materials and whatever. So that's the first thing. So what I want to point out is that this essentially, this is the dividing line here between Thursday and Friday. This is what Friday looked like. And look what Thursday looked like. It's just not all that bullish, right? I mean, it never really got going here, and yet price action did make a new high towards the end of the session in late afternoon on Friday. We pushed higher, but as far as the weighted AD is concerned, it didn't really do much here, and you really just kind of bobbled along. And the reason for that is because the sectors on Friday, they were somewhat mixed. If we go back here and we expand this one, you can see these are the numbers that are actually making up those histograms, meaning the action in here. And this is the advance or decline on a percentage basis of these sectors calculated from the open. And this is very, very important, not looking at any sort of gaps, but just from the open. And look at the front end. So market was up, hit the 6,600, and XLK, the most important sector, was down 0.25% from the open. Financials finished also 0.25% from the open, right? All the strength was happening in consumer discretionary and communications, but you want to talk about consumer discretionary, we're going to talk about it a little bit later in the show. Tesla. Tesla was absolutely on fire. That matters. That's pushing this sector higher, pushing the S&P up. These things have a lot of weight. And once you move past discretionary and communications, what have you got? Dark red. Dark red indicates that the sector was down more than 0.5% from the open. Pink is less than 0.5%. Staples were also down. And then here utilities were strong. And you can see real estate was only down a little bit, and materials were down about half, and energy was down 1.02. Right? So this also, to me, is not really the sign of a super healthy advance. This is more of the type of market you will see when either A, the market is tired, or B, it's in consolidation. But not the type of thing you would see when you have push to a new high and a big expansion of range to the upside, which granted, we didn't get a major expansion of range on Friday, but it was pretty much a bullish day. Any types of, pullbacks were generally viable, but more importantly, it's a day that actually made a new two-day high. That's the important thing. As I was saying earlier, if you're talking about a day and looking at context, that's an inside day where the market hasn't done anything, you don't want to put too much weight on the fact that the context hasn't done anything either, because that's basically what should be going on, right? So that's our look under the hood. And now let's get a little bit deeper and let's take a look at market profile. I want to show you a couple of important nuances that developed not only today, but have been developing in the profile over the last couple of weeks or so. All right, let's pop over to a little bit of market profile. This is something obviously I love talking about very much. It's really getting kind of deep under the hood of what's going on in the markets. I always say that the market profile is the ultimate complement to everything else I talk about. It is the ultimate contextual tool, but I never believe it is something that you should trade off of just by itself. It is just another data point, but it is often a very, very powerful data point. And what it does is it gives us a fantastic framework within which we can then apply our technical analysis and our strategies using sort of the market profile as the starting point. So what this is, if you're unaware, is basically a market profile chart of the E-mini futures. And there are quite a few interesting nuances that happened here on Friday when we made the all-time high. So first of all, as I'm discussing this, go back to the beginning of this program and keep in mind everything I've been sort of building upon, meaning thinking that we have potential to be a top here. And I'm basically just trying to lay out all of the data points, if you will, or evidence behind that is supporting that thesis. And I do think that the market profile is one of them. So first things first, the yellow area is the value area. This is where 70% roughly of the day's volume traded in that session. Today we had, on Friday, a shift in price higher, but not in value. That's important. Value, if it's real, if the move is real and has something behind it, value should shift higher. And classically, value did not shift higher at all. As a matter of fact, the value area of Friday is completely inside of Thursday's value area. So the value actually stayed small, and it tells you that most of the futures volume was really just transacted here. And you've got these tails here, and then you've got a tail at the top, okay? Now, speaking of the tail at the top, this is what's known as an excess high. Excess is when you have single prints going like this, kind of shooting up. That's an excess high. And almost always, at every turn in the market, could just be an intraday turn, but especially also at a bigger turn, there is something that I call the taper, and that means the taper of volume. This is one of the most powerful signals, especially for day trading, and is the simple fact that, look, the volume tapers off when it hits a top or a bottom, and it did so very classically. What happens is, generally in the profile, at every level, at least 4 digits of volume always trade, and then it tapers off when it comes to a high or a low, and very often tapers off to prints that are just 2 digits, and we got exactly that. In this L period, when the market topped out, you can clearly see that the volume got less and less in the thousands, then the hundreds, and then less than 100 up in here. So you had a clear taper as well. So that's point number 2. Beyond that, we are starting to stack some virgin points of control below us. Virgin point of control is when you have the highest volume node of the day that doesn't get tested. So the point of control is this level here on Thursday and this level here on Friday. It's where the letters are colored green, and it tells you that that's where the most volume of the day traded. Now, before we talk about the virgin points of control below us that haven't been tested, this POC, or point of control, is also yet another data point that also supports that we might be at a top here, because much like value should follow price, and value area of where that 70% range should expand with price, the point of control should also move up with price when the market is rallying. Today, on Friday the 12th, it clearly did not. The point of control actually remained relatively low in the session right here. This is where the point of control closed. So by the end of the day, the most volume that had just been traded, if you look closely, it's like 25,000 and some odd contracts, was right there. On a stronger session, or maybe a session that would be pointing to some follow through and actually going higher from here, the point of control would be here or here, and more than likely you would also see the value area expanding out to the upside. So instead of this yellow square area just being here, it would go more like this and it would be more expanded, but we didn't get that. So that's another data point to consider. Okay, beyond that, I talked just a second ago about what we call virgin points of control. So a virgin point of control is when you establish your point of control, which is your high volume node, right here, wherever you see the green, okay? And then the next day, that level is not tested. And the reason that level is not tested is because the market is trading on momentum, which is either bullish or bearish, depending on which direction you're going. And that momentum is so strong that the market never comes back and retests, or I call it tagging up, those high volume nodes. And when it leaves that point of control untested like that from a prior session, it becomes a virgin point of control, or VPOC. We call these VPOCs. And when the VPOCs start to stack up below us, I've talked about this in many weekend editions, if you recall, when the VPOCs start to stack up below us, that is also a sign that the market is getting overextended, because it is not normal, essentially. That's not what the market should be doing. A healthier market will be supported on the bid by stronger players, or I should say stronger handed players, right? Bigger players will always support the bid. That means that they are willing to wait for pullbacks to buy the stock that they need, because why? They are institutional players, and they are going to be judged by their clients according to the VWAP, right? They need to beat the VWAP, so they are not interested in just hitting the buy button and smacking it at market and just pushing things higher and higher. That's what retail does. That's what smaller traders do. So when the market has multiple days where the point of control isn't tested and leaves a virgin point of control behind us, it tells you that there is a sign of strong momentum in one direction, and that momentum sometimes is unsustainable. So right now, just in the month of September, we actually have put in 4 virgin points of control below us. You can see here in the 9-10 session, that's VPOC number 1. We did it again in the 9-9 session, that's VPOC number 2. In the 9-5 session, we put one here, and then we put one here as well in the 9-3 session. Now, there's a number of virgin points of control below us, even below that. It's more like 8 or 9 altogether, but I'm not really counting those so much as a problem because they're quite far away. Those are much deeper below us, but just the fact that we put on 4 VPOCs in the month of September is somewhat of a tell. And again, all of this to me are just data points that are accumulating that potentially we may have an excess high in place here and see a little bit of downside next week. All right, time now for our number 1 draft pick. This is where I give you my best trade idea, basically, or at the very least try to alert you to one specific issue that I think is going to be in play next week that you can make some money with. And this week, it's got to be Tesla, because that stock was absolutely on fire today. It broke out of a technical resistance. And we also discussed this earlier in the program, where I was saying that this really was what was powering consumer discretionary higher. And if I just look back over there on my market profile portrait thingy, as I was telling you, I call it the sidebar because I've got it sideways on a portrait monitor. Consumer discretionary was literally, well, I shouldn't say it was the strongest sector, it was in the top 3. There were only 3 sectors today, interestingly enough, that had that dark green designation that were up more than 0.5%. Those being consumer discretionary, communications, and utilities. Utilities were the strongest, which also, it's not that bullish, right? That's the other thing. It's like, again, with the data points that are coming together of it, pointing to a potential top, utilities shouldn't be the strongest sector. It's utilities. I mean, they literally make up 2.4% of the S&P. That's not what you want to see. Consumer discretionary makes up 10.5% of the S&P, but again, within that, Tesla is one of the heaviest weighted stocks. So if you get a big rally in Tesla, you're going to get a move in consumer discretionary, and it's going to impact the S&P. So anyway, just keep that in mind. But as far as the individual stock is concerned, Tesla was very, very strong, and I just wanted to point it out to you that probably pullbacks are going to be viable here. Myself personally, I always do everything in sync as much as I can with the broad market. That means that if the broad market isn't bullish, I'm not going to be doing anything on the call side in stocks unless it's net short calls where I can get in at a 0 debit. And also if we're near an inflection point where we are now, where I feel the market may be soft next week, probably not a play. But this is something you should watch for on a pullback, especially if the market does pull back, let's say 2 to 3% next week. Watch to see what Tesla does here and see, does it actually hold these gains, or does it come back here inside of range, right? We're gonna, that's going to be very, very interesting if it does. And if it does hold this range and you don't see any action back inside this area, that's a pretty strong signal that there's a little bit more in the tank. You definitely want to be looking at options on this one, because I just want to leave you with one thing. We were able to profit from this already today in my weekly options room, doing a ratio spread for next week of 450 to 500, meaning that we are long the 450 calls and we are short 3 times the 500s up here. And you may ask yourself at first, why would you do that? Like, that's just so far ahead and whatever. The fact is because it priced out at free. We paid a nickel debit. It then priced out to free, and then it was actually trading for a credit. And just to show you how crazy the options were in Tesla today, I want to leave you on this particular screen right here. And this is a graph or chart, if you will, of the 500 call expiring next week on September 19th on a 5-minute chart. And I just want to let that sink in. This is the 500 call. Okay, Tesla didn't even make it to 400 yet today. So basically pricing in another 100-point move on top of what it's already done. And look at what this call did today. This call at the open here was about a dime, which is what you'd expect. It's about what it should be, about 10 cents. And look at what happened over the course of the day, going up to about mid-afternoon. That 500 call went all the way up to 82 cents. And this is why we were able to put on such a wide ratio spread of 450 to 500 at a nickel debit. And at the end of the day, when the 500 calls collapsed completely back to more reality, I would say, even though the stock was still remaining strong, right? But the vol just kind of came out of those very, those calls that are very high up in the chain. Our spread already expanded so much that we were able to close a part of it for a 50-cent credit just in a matter of hours. So just keep this in mind. I wanted to specifically point out how crazy these options were today in Tesla, because it will probably continue to be that way into next week. If you see the stock continue to be strong, watch these calls, because they can really get pumped. And there's a number of ways that you can speculate on this in both directions. You can be a buyer of these calls, of these out-of-the-money calls on a rally day, and see 3, 4, 5x your money. You can also be a seller of these calls if you see that Tesla is topping out, because these are the ones that are going to really collapse. Because as you can see here, just as quickly as it went from 20 cents to 80 cents, it basically went back down to 20 cents by the end of the day. So lots of opportunity there, both in the equity and in the options of Tesla. Okay, this segment is called Should I Do This Trade? It's a segment that we do now and again where I take a trade idea from a subscriber in my weekly options room, and we analyze it together on the air, and we see if it's actually a good idea or a bad one, hence the name Should I Do This Trade or Not. And the winner of the idea that I pick always receives a free month of my room credited to their subscription. So this week's trade is brought to us by someone named Vermilion Dave. That is his screen handle in our room, and he is talking about United Health Group. So before we get into the trade idea, let's take a look at the chart of UNH, because it is an interesting one. And regardless of whether or not you want to do any of the stuff that I'm about to talk about or not, I believe this is a chart similar to Tesla that should be on your radar, because it is moving up now, and that is against the backdrop of a very large downward move. This stock was pretty much cut in half recently, from 600 all the way down to here to about the 240 area, and is now rallying. And in doing so, it is also leaving a little bit of this gap still unfilled above us. The gap basically is going to take it up to the 375 level. So if the market holds up next week, and again, remember, everything for me at least is always tied into the broad market. If the market's going down, I'm not interested in any of this stuff. But regardless, if it holds up okay and you feel like UNH is something to look at, you probably want to be setting up some spreads that are targeting that 375 area next week for the remainder of the gap fill. So let's see specifically in our room what Dave said. So this is a thread that I created here in our room. From our alert section. I broadcast live in this room every morning for the first 2 to 3 hours of the day, every single day. But if I do a trade live in real time, it's always a cut and paste from my actual fill from my real money account, and I paste it here into the alerts section over here, and that comes out in real time both on this desktop version that I'm showing you now, but also to our dedicated mobile app. ShadowTrader has its own mobile app for Android or iPhone, and you get it there instantaneously. But inside of these threads, I created this trade idea thread where people can give their ideas, and we can see here what Dave was saying is that Dave was saying, why don't we do a ratio spread on UNH here for next week using the 375 and 390 strikes. And he's also saying you could sell a UNH 320 put as a little bit of extra premium if necessary. So we'll get into that in a second, but let's just deal with the call side first, talking about basically buying a 375 call and selling two like that. So the structure will be like that, +1 -2, two 390 calls. And let's take a look at the chart first of all, just as a recap to see if that makes sense. Obviously, we've already looked at it, so we know that it does. We know that we've got this target area here to the gap. And now let's take a quick look at the chain here of the UNH and see what's going on with that particular trade. In any sort of ratio spread where you are a net short structure, I call that being a net short calls in this case, because you are net short. You're long one but short two. In any case where you are net short, your main concern is you want to be looking at two things, I think. One is implied vol relatively high, which I would say it is here at 42%. And then the other thing that you want to be looking at is what are you getting for the calls that you're looking to sell? Is it basically worth your while? You don't want to be in a situation where you're putting on a very cheap spread that's selling some far out of the money calls that aren't worth it. But this is not the case here. I think it is actually worth it. If we were to sell two of those 390s, you'd be bringing in about 45 to 46 cents, which isn't bad, and you'd be buying these 375s. You can clearly see here how if you traded +1 of these and -2 of these, this cost is almost all negated. And you can see it down here when I put it here in the Analyze tab, that the +1 -2 structure comes to a 20-cent debit. And so to that end, I think this trade should probably be done. Now, the other part of it was that he was saying, what if we sell some 320 puts? That's not bad either. You could do that for some extra credit there, like 73 by 86. But the main thing is always just check the chart first. So why 320 and where is there some support or resistance at the 320 level? Well, we want to basically just look at the dominant trend line going to upside like this. And then it gets a little bit steeper here. And you want to make sure that that call is well below that area. In this case, it is. You can see that your trend line is coming in right around 336 is this 8 EMA. Let's say the trend line is around 330, and thus the 320 call would be here. To be honest with you, I would probably go a little bit lower. I would sell a cheaper call that would be down below here, because I would think if the stock was to come in, the trend line should support, but if it doesn't, these prior highs should support. This is a pretty strong consolidation here, and it was a serious breakout point when the stock moved higher from there, and therefore the high end of that range should support if it was to come back down, right? So there's an idea in UNH potential of a ratio spread. If you look at the chart right here, just to kind of explain it one more time if you're not understanding, you would be long this call right here at the 375, which is the full gap fill, and then you would be short two calls up here at the 390. And basically your idea is that as this moves higher, the value of this spread is going to expand. Obviously, at the high point, if you were to break through here and go all the way to 390, you have $15, but that's not really what you're playing for. Basically, since you're putting it on for just 20 cents, you're looking for what I call expansion, where that spread is going to move to 80 cents or $1.10 or $2 or whatever. As it moves up, you put on a number of contracts and you're selling into strength as it's going up. Remember, as I always say, any type of complex spread should never ever be viewed as a roulette wheel or a binary outcome, or looking for what that max value of the spread is. The max value is absolutely meaningless. I always believe that you should treat options the same way that people treat stocks in a day trade, so to speak, right? They want to buy at X and sell at Y, and that's basically it. And they're looking for targets, and when the stock hits that certain target, they're selling the stock. And I think it's the same thing with options, that as the stock moves up and it starts to hit certain signposts, obviously because we're trading in a gap, there's kind of a void here, so you don't have many signposts in between. The next one really is just the 375 resistance. But if you were to move up to there, this spread would certainly expand, obviously, right? Because it would take a little bit of time to do so. You'd be long that 375 call, short the two calls up there at 390, and those two are going to be draining as you go, and they're certainly going to be worth less than the increase in that 375 call, all right? So pretty good idea. Like I said, if it's not your cup of tea, if it's a little bit too fancy for you, or it's a little bit too much open-ended risk up there, perhaps you may want to just use this idea to your benefit and think about something that's more in line with your own risk parameters, being either just a naked call or a call vertical or a straight butterfly or something like that, that's going to benefit from the potential of UNH moving up a little bit towards that full gap fill. Okay, before we wrap things up for this weekend edition, we got to do a quick looking ahead just to get an idea of what's going on in economic data and earnings. Earnings season is basically quiet right now. We're kind of waiting on the next one, so it's not really a factor. If you notice here on the screen, FedEx, however, will be reporting. This is by no means a comprehensive list. As I always say, I only talk about the earnings that I'm really interested in or something that I think may have some effect on the market. And FedEx, of course, is and should be, or potentially could be, a barometer for economic health, certainly. So I think people are going to be looking at these earnings a little bit closely, and that's going to happen on Thursday. But really, there's only one thing that matters on this whole page right here, and I think we all know what it is, and that would obviously be this, which is the FOMC rate decision that is happening on Wednesday at 2 p.m. Eastern. It's going to be all about that. Here's what you're going to be looking for, basically. The market has already priced in at the minimum that it is getting a 25 basis point cut. We didn't do a Fed watch in today's program, but I think the odds are at like 95, 97% or something like that we're getting that 0.25. I don't think there's much of a chance that we're getting anything bigger than that, but it's all going to be about the press conference as usual and trying to parse what Powell says and whether or not he is dovish enough going forward to give the market additional rate cuts at the two meetings that are still going to be left after next week's in 2025. That's basically it. Everybody is going to be looking at that, listening to what he has to say. What is going to be his tone in terms of, can we expect more cuts after this one? So wait to see for what that's all about. Honestly, my assessment here, let's call it a scenario, not a prediction. This entire program has been about, mostly talking about the potential for lower here. I think that if the market only gets a quarter, which is basically what's expected, there could easily be a sell on the news reaction, because this has certainly been priced in, I think, at this point, and it's what the market is expecting. And I'm not sure what the next catalyst is going to be to get us higher if that news is already out. So again, not really a prediction, but more like just a scenario of how things can play out. I would not be surprised if people sell that announcement upon getting the quarter point cut. But again, the more important thing is, what will he be saying, and is he going to be pointing to more cuts on down the road? And that's our program for today. Thank you so much for spending a little bit of your weekend with me. If you can, please hit those like and subscribe buttons. It does help the channel, and also hit that little bell icon so you'll be notified whenever ShadowTrader posts new content, which I like to remind people is every day. We've got something going on called Shadow Shorts, and you can sign up for those on our homepage at shadowtrader.net, and you'll get a short video from either myself or my team. And you'll have trade ideas and trade education, usually some very salient stuff that can help you make some money in the markets. All right, let's recap a little bit of what we talked about. I basically laid out for you a lot of data points from technical analysis, market profile, and market internals that are potentially pointing to some change. What does that mean? Change in the markets means when there is a change in tone or a change in trend. And right now the trend has been up, but we are coming right up into that psychological resistance at 6,600 and also that trend channel resistance. So putting it all together with everything I talked about, I do think there's potential that we come in a little bit. A lot of this, or I should say how far we come in, is definitely going to have a lot to do with how the market reacts on Wednesday. Remember, that's going to be very, very key, that we are going to get that FOMC announcement on Wednesday. All right. If you enjoy this program and you want to get a little bit deeper in to what I do on a daily basis and trade live with me every day, you should check me out in the weekly options room. There are links in the description below. There's always a $7 1-week trial on our site. And as always, our other two rooms, which is the live trading suite, we've got 8 professional traders there doing their thing all day long in 2 separate rooms, one room for stocks and options and one room that's dedicated just to day trading futures. If you want to get involved with that, we always offer a 6-month free subscription if you open an account with our partners at Tasty Trade, and the link to that is also in the description below and also on our homepage. So it's a pretty phenomenal deal. You can trade with my team for 6 months just by opening an account, again, with our partners over at Tasty Trade. All right, that being said, as always, coming at you from beautiful Los Angeles, California, I wish you good trading and good night.